Well, we want to make sure to get to Chris's information, because what I like about today's information that you brought, Chris, is it's things that almost everybody has to deal with. I know many times we've had you on and we've talked about more complex strategies and bond markets and things that not everybody's involved in.
Right.
But this is for, I like it to say, it's for the average Joe. Most people have a 401k. Most people have heard of an IRA in some way, shape, or form. So these are things that almost everybody can apply to their daily lives.
Right. Well, and that's why I brought these topics up is, things I've been dealing with recently. I've been setting up 401ks for a couple of companies, some in this community, and doing the enrollment meetings. And as I'm sitting in the enrollment meetings, I'm talking to a room full of people and telling them why they should use the 401k that their company is planning to provide for them. And shocked at how many people in the room have no clue what a 401k is, why they should use it, what the benefits are. And the same.
It's pretty amazing this day and age. You would think everybody knows, but that's why we do this show, huh?
Well, I get stuck in that world where I just think everybody, this is common sense. Everybody knows what a 401k is, and then you meet a bunch of people that don't know what a 401k is, and you realize, maybe I'm getting ahead of myself. Maybe I need to backtrack a little and talk to some of the people that don't know what all this stuff is.
So it's not a race in the Olympics. It's just 1 meter longer,
something like that.
You know what's sad about it is, and I talk about it when it comes as it relates to your credit report. You get absolutely no training in junior high school, no real life training on how to manage a credit report, and it's the same with financials. You get no real life training on how to deal with a 401k or any of that. And usually by the time you're 18 years old, they've probably already been working at Starbucks and already had the opportunity to have one.
Yeah, I totally agree. I mean, most kids graduate high school and they haven't been taught how to write a check, nevertheless set up an IRA.
They know how to spend it, though.
Yeah, they do. Well, I got a 4-year-old. She knows how to spend it. So
they learn early.
Yeah, they do. That's the easy one.
So I know I mentioned Starbucks. I didn't do that by mistake. I know that Starbucks has a 401k matching program, and I know that's something you wanted to talk about today. And I think that's probably one of the first questions you should ask when you're looking at your 401k plan at work.
Definitely. I mean, this is free money. This is 100% return on every or the dollars invested. Basically, a matching program works like this. Your company is going to tell you we'll match up to a certain percentage. So some say we'll match 100% of the first 3% that you contribute. So you're going to contribute 3% of your income from your paycheck, and your company is going to match you on 100% of that 3% contribution. So this is free money. You just made 100% on your contribution.
I call that a raise.
That's pretty close, yeah. The other thing, some companies, and I see a lot of companies doing this recently, trying to encourage bigger contributions, is we'll match 50% on the first 6% of your contribution. So they're encouraging you to contribute 6%, nice. But you're still getting basically 3% of your compensation contributed to the 401k in the form of a match. So it's the most important question to ask because it's free and it's available to you. And if your company has a matching program, you should be using the 401k hands down, at least for the minimum to get the matching contribution.
Okay. Oh, that's great.
That's good information. Well, you got 2 minutes, Chris, before we go to break. What else should they know about the 401k? Why should they? I mean, obviously, the matching is important.
Yeah.
But there's a benefit because a lot of people go, why should I have money taken out of my check?
Right. So I have to do the quick disclosure that myself and my broker-dealer Next Financial, we're not tax advisors, so we can't advise on taxes. You need to talk to your accountant and see how it affects you directly as far as your taxes are concerned. Always talk to a tax professional. But the tax benefit of putting in money directly from your paycheck is that money hasn't been taxed yet. It's pre-tax dollars. So let's say your paycheck, you're going to contribute $100 to your 401k, and you're in a 30% tax bracket, real easy round numbers. That means $30 of your $100 contribution was going to go to the IRS to pay taxes. You were only going to put $70 in your pocket. $30 was gone. If you contribute that $100 to your 401k, you no longer have to pay that $30 to the IRS. That full $100 goes into your 401k. So you got to keep the money you would have paid to the IRS, and you put your $70 that would have gone into your pocket into your retirement. So a lot of people don't understand this extra added benefit of pre-tax dollars, but it's huge. Over time, taking money from the IRS and keeping it.
I love that because you put that together, you compound that with the 401k matching, and now you're looking at a big difference at the end of the year.
Yep.